everyone. Welcome to the Stock Market Morning Prep video for Friday, March the 7th. A little bit of a mixed bag, sort of like a kind of a hurry up and wait. Dow Jones up 61, Nasdaq down almost 6 points, S&P up 3, and the Russell down $1.36. So pretty much subdued trading yesterday, but there were some key sectors that I caught on my scan that I wanted to show you tonight, which is very interesting, and all of you know one of my favorites for 2014, and that is the solar sector. So we're going to cover that tonight. Have a couple charts for you guys to take a look at. No indicators today. Nothing really has changed. No reason to waste any time. So I want to dive right into it. First of all, Asia in the overnight session, very, very quiet. Obviously, all waiting on the non-farm payrolls, as well as Europe. Europe is down slightly. FTSE 100 down like 17. CAC down about 14. So really less than 0.2%, really not going on. So everybody's waiting on the 8:30 number. Now, remember, usually the number kind of dictates where the trend's going to be for the month. So we can see how this, how the reaction to those numbers. Remember, it's what they do. It's not what the number actually comes out of anymore. So the number could be bad, but bad could be good numbers, so to speak. And we don't know which way and what direction the markets are going to take it. As you know, the job numbers are tied to QE, so this is a big, big number. Okay, now we're going to take a look. You should be really light going into today, or if at all, be flat, because remember, when the markets move, this number really is a market mover, guys, and you don't want to be totally long or totally short or whatever your idea is. Going into today. Today is a good day to observe. Obviously, get some trades in if you have to, and then really start making your plan for the month over the weekend. That's what I like to do. After the numbers come out, we get a big risk event. Numbers are out, and then I like to now kind of put my strategy to work over the weekend, do my research, and then look for trades and set up accordingly to what the numbers are going and basically what the market participants are anticipating where we're going to be. So you'll know today if the markets actually sell off or not. Now remember, we are extremely overextended. We hit a major target on the daily chart on the ES, which I'll show you as well. We made new intraday highs yesterday at 1881. We basically hit our 1272 extension, and I'm going to show that to you in the chart. So let's get right to it. All right, first thing, we had a Fibonacci cluster. This is the Japanese yen, the spot yen future. Now remember, you can look at the dollar yen. The dollar yen will follow what the markets do, okay? The yen, the Japanese yen, is inversely correlated. So if the market goes up, the yen should go down. If the yen goes up, the market should go down. Okay? So it's inversely correlated what it does. Now, we had a major breakdown yesterday. And I know I hate to say it, it's kind of funny, but guess what? If the yen goes lower, the market continues to go higher. It's just absolutely crazy. It's funny to say, but I would love to see it sell off. It just the thing to me is, I'm a trend trader, so whatever it is. The market goes up, the market goes up. I look to buy stocks, quality stocks. The thing is, it's just you can't just get overly aggressive at these extreme levels. So you want to buy stocks, and if you're taking an intraday stock, sometimes 2 or 3 positions. Well, if the market actually had reversed and corrected 8, 9, 10%, you can be a little bit more aggressive whether you're day trading or swing trading. In this type of environment, you want to play defense and be less aggressive, less risk on, and less share size. So I'm dying for a market to a little bit, at least to correct. 6, 7 I'll take. It's just absolutely crazy. But anyway, the yen is breaking down here, right? Now, the yen still has a shot to get back up. But if the yen breaks down and we continue to move lower, obviously, as you can see, the next stop is going to be this area here where we have this cluster of support. Okay, now we're still kind of, and I don't want to say it, but we're still kind of like right here. This will be the last ditch effort, is this little line, but nonetheless, this Fibonacci cluster of resistance actually held, and now we're starting to break down again. But if it breaks down today, and the yen is going to be a big factor, all currencies are going to play a big role, are going to move based on this non-farm payroll number to come out. So again, but we're breaking down here, so that's not a very good sign for the shorts. It looks like that the market may continue to rise. Now remember, anything can happen today, so this really is not as a non-event what I'm showing you today at the moment. Okay, we hit a 1272 extension. This was the high from here. The last high to the low Came out to a 1272 extension. We had it at, I believe it was a 1880, 1879. Hit a high of 1888, and then obviously pulled back. We had a little bit of a sell-off yesterday, but nothing really big. And then with they bid the markets up, and now we're up again. Let's see here. We are up $1.25, upper right-hand corner, in the ES. And this is the overnight electronic session. But what is happening here? In the last 3 days, we've had literally a drop in volume. So to me, volume confirms price on as far as movement. And this is telling me if we had some real good volume and we have good price action, that would confirm that, hey, there's some real buying going on. But remember, guys, you got to take everything here with a grain of salt. So we are moving up. Price is moving up. Therefore, stocks are moving up, if you will. And that's something that we have to continue to monitor. But I don't like this here. This is interesting here. But again, 1881, big extension. I believe now we're up 22 out of 24 trading days, which is out of control. I mean, if that doesn't scare you in itself with a V-shaped bottom here, at the highs no less, and making new highs with low volume, and all the other asset classes really not lining up, to me that's a big red flag. But again, you still want to take it accordingly. Just want to show you quickly this monthly chart here. We have an outside month reversal as of right now, but remember, we're only into the first week of trading, so this could change dramatically, okay? But I just wanted to show you how now we're starting to get that, we're starting to break out higher. Look at how far away we are from the 20 month moving average. 1637. That's crazy. I mean, it's just lunacy the way what's going on here. However, we're traders, and traders follow what the trend tells us, and the trend is up. That's no two ways about it. All right, ES on the hourly chart. Little consolidation, little pop up yesterday, 1881, and boom, they sold them down for the hour, and that was pretty much it. Now we just kind of rally back up again, and we basically just fade that move again. Boom, they roll right back up again, and now we're horizontal, just kind of chopping around, up $1, down $1, and that's going to happen until about 8:30 today. All right, now I want to dive into these sectors here. But first, I wanted to show you this. As you can see here, just underneath this trend line, gold is still holding in there, and bonds. Yes, bonds are. Look, the bonds are going to get hit if these numbers, if they like these numbers. But if you look at it, bonds really still didn't really sell off. Now it sold off the highs, but really hasn't sold, so it's still hanging in there. And that's to me, and gold being up, and then the yen. All right, the yen did break down a little bit, but still have some red flags out here. So I would love to see these asset classes that are inversely correlated do its job, and then if we're going to go higher, let's break higher with gold breaking down, TLT moving lower. Some of these safe haven sectors moving lower. That's something I can see. And then you see that you got a healthy market, but we really don't here. Okay, so now we have the spiders, and as you can see here, plenty of room to run back up to this 190 area, guys. So, if you don't think we can run up these, think again. Now, remember though, when you get these little candles, they just keep grinding higher. They're just killing the shorts here, and the shorts got to buy them back, and they push them up higher. But what happens when you have these down moves? As you can see here, you wipe out a good month, 2 months of moves in just 5 days. And look at the candles when they're down. They're nasty. So risk reversal happens very, very fast. Or I should say risk off happens very fast. So you got to be careful about that. That's why I'm saying please don't put out a lot of longs out here, because when you say, oh, okay, I'm going to wait for the next bounce to get out, it doesn't happen. And now you're getting out the lower of the day when you should have got out 2 points higher, just for a figure of speech here. But just please use caution here. Okay, transport starting to do its thing. Got a little bit of volume here. I like that. So on a bull camp, I do like the transports. Remember, it has a lot of room to run up here. So we got 140 to this upper end of this trend line. So looking pretty constructive here. Okay, remember, guys, the weekly charts, they look fantastic. The markets look great. It's just that we're not getting any pullback. I think we haven't had a 10% pullback in almost 2 years. So anyway, here's the IWM. A little bit of a pause day after that big spike up earlier in the week, but now it has also a lot of room to run to the upside. And again, above the 8, above the 20, above the 50, and way above the 200. So, the patterns are quite constructive. It's just when you have this move that's consistently up with no pullback, that's a big red flag for me. I mean, markets need to rest like a runner. They need to rest. All right, Qs, as you can see. Now, Qs, it's interesting. We had some weakness in the semiconductor sector, right? So and parts of technology. There's all different areas of technology, but the semiconductors, which is a big plus or minus when they do move in either direction, they were starting to lag a little bit. So we want to see what happens here. Energy is building. You can see the Bollinger Bands are tightening. It doesn't tell you what direction, but it does tell you that energy is building here. Look for another explosive move to vacate this area. So we'll be watching what the cues are. Maybe might get some sort of a setup here in technology. Okay, here's the diamonds here. Still, only this is the last indice of the 5 that we follow has not taken out the highs, or at least challenged the highs. And this is one of the laggards, rightfully so. It is a laggard, so really no big deal. But you probably look, if the markets do move today, you probably get the movement in this as well. Take a look at GLD. Again, just want to show you that's the ETF. Let's go into these sectors now. Still holding well above the 200 here, okay? Remember, the monthly chart is still in a bear market, okay? That's how you determine a bear market or bull market. Most people do anyway, most traders. 8 and 21 cross, downside, upside. Still right now is back testing, and I'll show that monthly chart to you on Monday when we get into the longer term picture, the bigger picture. USO, nice big move to the 200-day moving average. Now remember, even if you don't trade oil and you want to trade some of these oil stocks, you need to know what oil is doing. Very important. Now, when I get into these sectors, I had a few emails. Oh, how do you look for stocks that you like to trade? Well, first of all, I have a huge watch list of stocks that I trade on a consistent basis, and I just run through them on every night while I'm doing my homework. And I would just look at 300 to 500 stocks, and then I make some notes. Getting close to a setup, put some alerts on in your trading platform, and then what I do in particular is I like to see certain sectors, and by doing that I follow the ETF, and then we dial down. I've said this many times before, we'll get a lot of new subscribers that come in. We dial down into the ETF, just go right into Yahoo Finance, you put on the ETF there, click on holdings, and it'll give you the top 10 holdings of that ETF that's weighted. You take the best 2 or 3 charts, you put on your watch list, and you watch it. Now, I've been watching in December 2013. I did say that my favorites are banks, solars, and home builders. So those are my 3. But in the beginning, I also said watch the oil services sector. I think they move, and they start moving real good. And as you can see, the OIH broke out of this, and this is the Schlumbergers, the SLB, the BHI, and the HAL, the Halliburtons. This is what we like here. Now remember, as we go up, do we look to buy these into new highs? No, not at all. But I like this area here. Once price vacates this area at 93.40, it's blue sky, as you can see. Blue sky. So I am looking for a pullback, maybe a little bull flag into this area to look to get into Schlumberger. Schlumberger is the best of breed in this sector, by the way. XOP, oil and gas, love this area, and I mentioned to you yesterday many times, Valero is my favorite. Look what happened yesterday, and I didn't even see that. You can't catch everything, but look at this. What a beautiful chart. Now, basically just confirming what I'm looking at. I would like to see this now retrace back 50% of that candle, go sideways and move up, and that's when we look to buy. And you can buy on these breakouts, guys. I mean, there's no question about it. You can buy on these breakouts because this is healthy. Had a big move. We chopped around a little bit. Now we're vacating the area. So this is a great move. Obviously, up 3 days, big like this, you don't want to be chasing. So even if we got back into 50% or even maybe back in here, that would be a gift in the Valero. But I do like the Valero. Here's the XLE. Now, XLE kind of stagnant, taking a little bit of a break, but go into the XLE and look at what's developing into some good flag patterns. Any type of bullish pattern, and look and watch them and pull alerts on them. That's how you really look for these golden nuggets. Now, we talked about solars. I didn't have any solar charts yesterday, but I wanted to show you. Look at TAN. This is the solar ETF, TAN. Look at this beautiful breakout of this consolidation. Now, one thing I want to show you, the relationship between crude oil and TAN, which would be solar, alternative energy. When gold, I don't know why I keep saying that, sorry. When crude oil moves up, TAN moves up, or I should say the solar sector moves up as well. Well, you would say, well, why would that be? Well, when oil gets expensive, the analogy here of thinking is, well, alternative energy is the next alternative, and we would go into the solar sector. So you need to know the relationships here. So when oil goes up, it's correlated. Oil goes up, solars go up, okay? So just keep that in mind when you are looking to trade this. Now, this is a sort of a volatile sector, and I just want you to understand that before you trade it. Here's a low price stock. Look at this big breakout yesterday. And again, I didn't see this, but look at this. Now, this is just started. So on any pullback here, you can look to buy some of these either stocks, or you want to go into some of the lower priced options because they haven't moved yet. You can do that with a lower priced option. This is YGE. I mean, some of them are still waiting to go. Here's First Solar. Here's one of my favorites. Big move lower all of November into February, broke the bearish symmetry, now came back in, dropped lower, and now we rally back up again. So we're getting another move lower back into the 20. Really is a gift on First Solar. I mean, I think you see $75, $80 here by the end of the year, easy. Here's Trina Solar. Look at this massive breakout yesterday. Unbelievable. And you can see how we consolidated here. When you're consolidating on this base, and you can see the Bollinger Band starting to tighten, that means energy's building, and we're really looking for a breakout here. Okay, and or a breakdown, actually. You can do either or when you consolidate like this. But obviously with something like this, this is something I'd be looking for a breakout. Now, Trina Solar is on my list. Okay. Here's the new construction, home construction, right? The home construction industry. Just keep flagging up, breakout, flagging up, breakout, flagging up, breakout. Again, love this ITB. And this is all based on, Home Depot, Lowe's, some builders. So it's a generalization of home construction and suppliers. Okay. Here's the XHB. What can you say? Beautiful breakout. This is a little too big for a bull flag, but downward channel, break back out of it on volume, and now we're just drifting higher here. Again, needs a pullback. Don't chase any of these things. You will get your chance to get in, remember. Lennar, one of my favorite builders. Look at this, coming right back in again. I like to see it. I like to see a little bit more of retracement here. I'm going to do some fib work over the weekend, and I'll get some levels for you. PHM, another one of my favorites here. KBH is really, this is great. Now, this is giving us another opportunity. So I'm going to watch this KBH. Now, obviously, do you buy it as it's coming in like this? No, of course not. You let it base, let the base and break out of that base, and then you come back in. That's something that I'm be looking for in KBH as well. Look at this base. This is what you want to look for on daily charts. These base patterns looks fantastic. And XLF, one of my favorites, are the banks. They had a big breakout. Now we'd like to see a back test of this uptrend trend line from November 2012 lows. Okay, we can get a little back test in here. Go right into the XLF, dial it down, and look for the best 5 banks. Citibank, back above 50. Came back in a little bit. Great move from this area. Let's see where it goes. In the next few days, you might get an opportunity to look to buy some of these banks again. JP Morgan really just exploded here the last 4 days. But again, guys, a little bit extended. I like to see a little bit of a deeper pullback here on JP Morgan. I think they're better charts. One being, of course, is Goldman. Goldman, great move. Look at this, 2 days up. Now we just consolidated here, a little gravestone doji. So maybe we get a little pullback into this zone area here. Look for a pullback, guys. Don't chase these highs, okay? And then, of course, Apple. All right, now Apple just consolidating here. And remember, I said Apple's a consolidator, right? Consolidates, boom, breakout, right? Consolidates up in here, boom, breakout. And now we're consolidating here. Bollinger Bands are tightening. Let's watch what this does. We might be able to take it one way or the other here. So keep an eye on Apple. All right, guys, non-farm payrolls. Remember, use caution here. Let's wait until those numbers come out, and then you can start solidifying your trading plan over the weekend and even take a few quality trades today. Have a great weekend. Really enjoy the time, and we will speak to you on Monday. Take care.